Good evening, everybody. Welcome. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. First, we've got to knock out our standard disclaimer, then we can get on some charts and start looking at trades. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Excuse me, nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then, tonight's topic is letting runners run and cutting losers short. And so without further ado, I'm going to start tonight with the crude oil chart from today and yesterday. Everybody should see the 4-range chart on crude. If you're visiting or on a free trial, this is all of our indicators. We have background colors. You can see here we've got bar colors. Got the predictor here. The predictors you can toggle on and off. The bands, of course, you've got the mid band with the upper and lower bands surrounding the price action. And then we have a whole methodology around trading this. We'll talk a little bit about trade entries, but I want to focus a little bit more on backing up a minute towards our topic for tonight, which is letting runners run and cutting losers short. So let's take a quick poll of the team before I start marking up this chart. Excuse me. Is there something that we would need to know ahead of time that would help us anticipate whether in fact we were going to have runners or that we were going to be scalping and keeping our stops very tight? What sorts of price action and clues or breadcrumbs, if you will, that the market would leave behind for us that would, sort of skew us one direction or another? What are your thoughts in this area? Just go ahead, just off the top of your head. What would we be looking for in a market to tell us, hey, we might be getting some runners here, versus, I don't know so much about runners today. All right, Joseph. Hey, Joseph. General direction of the market. Okay. Trend or a chain. Trend versus chop from Carl. Tight ranges around the midband from Brian. MG. Wide trading ranges prior. Stripe backgrounds. New highs or lows out of Philip. Hey, Philip. Orderly and sharp spikes up and down from Carl. Okay, good. So looking at this chart, here is today, Thursday the 20th. Of course, all you know that I'm here in California, so this is Pacific time. So midnight for crude oil would have been right about here. Pit opens at 6, which would have been right about here. Let me just put that on the chart. Gary opens the room 5 minutes ahead of this point in time. Let me back it up a little bit. Blow this up a little bit more so we can sort of get a good feel for what's going on. So it's safe to say that in the pre-market of oil today, from the overnight session going into the pit open here at 6, we could have quickly drawn some lines ahead of time on here, right? Excuse me. And I would put lines. Oops, wrong type of line. Put a line up here at resistance, more or less, up in this area, right? In the overnight session, of course, you can see you had some support, kind of right in here, sort of right in there. And then right before the open, around about, I don't know, maybe 10, 12, 13 minutes before the open, you did put in this little swing here at 550, establishing a support level more or less right in here. Now, let's go back and pretend for the time being that we don't know what's going to happen. Let's suspend disbelief and just go back and sort of recreate the pit open at 6 and see what we think. So here we're coming up on 6 o'clock. for now, I'm going to blow this up just a little bit more. We can sort of pay attention here from the, after the market's closed, late afternoon on Wednesday, and then here we are going into Thursday morning. So in pre-market, as we're looking at this, we're getting ready to trade the pit open. What are we thinking in here? Are we thinking long trades? Are we thinking short trades? Are we thinking, man, we're going to get some runners because this is inventory day? Looks pretty choppy. What you in the pre-market before the pit open, we put these lines on here. Here's 3 lines: resistance, middle level of support and resistance, and then the little spike down here, 10, 11 minutes before the open. What are we thinking in here? This is, and the reason I'm asking this is sort of the anticipatory part of trading. In other words, we can form some opinions ahead of time, and we have to be flexible enough to be able to change our opinion on the fly if we're wrong. If we're proven wrong and the market flips or breaks out and starts to run, we have to be quickly on our feet, ready to change our opinion on the markets. But in this particular case, and I'll give you 10 seconds here. Hey, Diane, welcome. I'll give you 15 seconds. So it's a 2-part question. Part 1 to the question is, are you trading long or short? Come 6 o'clock. 6 o'clock is right here. It's coming up. Are you taking longs or short? Well, you tell it L or S. Just a simple L or S. Are you trading the long or short side of this market come the pit open on crude oil? L or S. And the second part for your type-in answer would be R for runner, SC for scalper. Are you expecting runners here, or are you looking to scalp? Let's give you 15 seconds on the clock. Long or short? Are you looking for longs or shorts? And you think you're going to get some runners, R, or SC, you think you're going to be scalping today, this morning. This is early morning, if you're just coming in here, crude oil, just before the pit open, and the market looked just like this. This is how we anticipate a little bit about how we're going to react and prepare ourselves to take trades. Time's almost up. Long or short, scalper or runner, based on what we see here. Now keep in mind, it's kind of a mixed bag on Thursdays with oil because inventory numbers came out on Wednesday. We know that. We'll go back and look at Wednesday in a second. And so sometimes you get carryover into Thursdays where you'll get some movement, and other times not so much. So when it comes to trading oil on a Thursday after inventory numbers, you got to be prepared for either one. Time's up. Let's do a quick analysis here. We can see that overnight until about 5 o'clock pre-market, we were more or less going sideways. But then shortly after 5:15, just before the pit open here, going into the hour before the pit open, we come and we start to break support. We come back up and we roll over. This was actually a short trade right here. And we come in and we spike down to the lows around 66, like this. Hold on, let me adjust my phone here. Stand by 1 second, please. Thought I had that thing turned off. There we go. Sorry about that. Now, in this particular move down, we come into the 66 support area, which was sort of a little support area from the afternoon before over here. But we do, the most pronounced thing on the chart, of course, is you can see that we turned the background red. All the bands in the mid-band are stair-stepping down. The mid-band is clearly red. And so if you answered that you're looking for short trades on a retracement, that's correct. We are now looking for short trades, right? And the areas that we're going to be looking to get short would be retracements up into here, right? mid-band all the way to 51, where we can clearly see there was some resistance from before. So any types of retracements up into here, we're going to be shorting. Now, the further anticipation in regards to runners versus scalpers, based on what we've seen in the pre-market, I would lean more towards the scalping mentality until proven otherwise. Now, what does that mean? Scalping mentality until proven otherwise. I think we would all agree that as long as this market traded within this range right here, like this, up and down, if it was going to do that, we're going to be shorting rollovers and taking profits down here, right? What would cause this? What would change our opinion? What would have to happen for us to change our opinion in terms of scalping? We'd still be shorting until, of course, this broke out and went the other direction. But what would have to help? What would have to happen here to change that opinion on scalping in the range? You've got about, let's see here, 66 to 90. I don't know, about 20, 25, 30 ticks. So it is a tradable range. It would have to break the low. Good. MG, Tom, quick on the trigger there. Absolutely. What would change our opinion? So here, let me back up. So if you're looking for kind of rules of thumb, okay, and I like rules of thumb because they can sort of stick in the back of your mind, and as you're making trading decisions, you can say, you know, I've seen this before, and here's what I'm sort of thinking is going to happen until proven otherwise, right? And so what we're saying is that as long as we're trading in this range here, we're going to be scalping, yes? Now, if we take this out and we start to exhibit, you know, downward trending behavior, lower highs, lower lows, grinding down, you know, etc., stair-stepping down. That's right, Mindy. Exactly. We will be looking for runners, continuation trades. Yes, come back up, kiss, roll over, come back up, kiss, support levels, on down with you, looking for runners. So we change our approach based on the price action and what's happening in the market. It's this simple. If you have lines on your charts in 20, 25, 30 tick increments, and you remain within the confines of those ranges, you are scalping. Okay, it's that simple. If, on the other hand, let me contrast this, hold this thought for a second, right here, okay? Let's go back and look at the market after inventories yesterday. Okay, here's 7:30. Oopsie, getting a little crazy on me here. There we go. All right, here is yesterday morning. Remember how we opened Gary opened the pit trading room yesterday at 6? Probably most of you, some of you remember this, right? Here's 6 o'clock. Inventories are at 7:30. So we knew ahead of time going into 7:30 that the oil markets, most times, not always, but most times, just sort of hang out for a while, waiting on the news, right? And that's exactly what they did. Here's from, you know, the pre-market session all the way to 7:30. It was stuck in this tight little range. And then, of course, you see we get this shotgun. Here's the news. It was the drawdown of 1 million barrels, and it was in line. Remember? 1 million projected and 1 million, and that's very rare that you're right on the button. Normally, we know it's skewed 2 to 3 times in the opposite direction. You know, drawdown, and they have a build of 4 million barrels. You know, that's the kind of thing. And then you get massive shotguns all over the place. This was a fairly muted shotgun. What we mean by shotgun is there's a rapid, you know, push of bars. Like 7:30 started here, you know, about here actually, and then all these bars printed in less than a minute. In 1 minute, all these bars printed. So that's what we call a shotgun. But notice that we didn't get huge spikes up. We didn't get huge spikes down. It didn't take out. It stayed more or less in the range, and that's because the fact all the news reader bots and the algos who are trading oil and you know, more or less took that as a flat program. But what starts to happen over here? More specifically, when we get to about 7:35, 7:37, 7:40, what starts to happen in here? Let me put a couple lines on the chart to help you out. Excuse me. What's going on now? What's going on over here now? About 5 minutes after the news, is the markets responding to the news? In here, it was unclear, right? You're still in the range. The first 5 minutes, inline numbers, staying in this range. So there's clearly no reaction, but just yet. But what starts to come in here? Here, let's go back and just let's pretend we don't know what else happens, and let's just look at this in a little bit of a vacuum. Get some more data on the chart here. Clean this up a little bit. Now, given the fact that we had inventory on crude, we got our shotgun, and everybody's typing in, you're getting lower lows. It's starting to orderly decline from Carl. It's starting to break support. It's heading down. We're downtrending. The background has turned to red. All the bands, including the mid-band, are stair-stepping down, which has also turned red. So now we are trading the short side of oil. Yes? We are shorting oil. Any retracement up into resistance, we are shorting. Now, given this condition that you see here, and the fact we just got inventory news, are we thinking runners or scalpers? Going beyond this point at 8 o'clock, so we're about 25, 30 minutes into the trading cycle, and I know I can recall in the room we started to short this. Gary and I were shorting this. Some of you might have been shorting it too. Are we anticipating runners, or are we thinking perhaps scalpers on oil here? Runners. Yeah. Runners. We are looking for runners. Why? Some of you already typed in runners. I see Joseph and Hardy, runners. Why runners? I'll give you a hint. News. Does news have any effect on financial markets? Does news have any effect on financial markets? How about employment numbers on Fridays? How about the Fed with interest rate announcements? How about, inflation numbers, sentiment numbers? Do these things affect financial markets? In other words, when you break out of a range when news comes out, are we starting to think scalpy or runners? Runners, right. Now, the indication is here that the direction is probably going to be down, but we all know that this can reverse and they can run it right back up. The point of the matter is that news affects the markets, and we have to anticipate that almost all the time. That's right, Hardy. I'm not going to go through every trade here because there's a ton of charts I want to cover, but let's quickly rip through it, get back to the other oil question that we had, and then flip on to something else. Okay, so here we're breaking down. We're getting some retracements. This turned out to be a monster trades. Falls off the map. I was trading this, by the way. I traded this. I loaded up a little bit here and made some pretty good money off of this. Came up, pings the mid-band, rolls over. So if you missed all of this, you had another chance to get in right here. Textbook mid-band rollover trade, right there. Right up, ping the right at the mid-band 5210, rolled perfectly, boxed it. You could have put the line, however, market orders, load the boat in here, and back on down she goes, continuing all the way through down to here. To put this in perspective, crude was trading up near 53. I mean, in this little 20-tick range here, up near 50, between 52.80 and 53 for the better part of the morning and the pre-market session. And it dropped, this first initial drop went all the way from here down to the mid-band retracement, 52.08. This alone was 70 plus ticks, this initial drop right here. Now, $10 a tick, one lot would have been 700 bucks. Yeah. And then after this retracement to 52.10, it went all the way down to here. 51.10 was here. This would have been 100 ticks, and it was still going. Got another retracement right up here to the mid-band, just shy of it. You got one more entry, a tertiary, third entry right here at 81, 80-81 roll. This was a 130 tick drop from here. One lot from here to here would have been $1,300. 200 ticks overall from up here. So you're looking at two-bagger, 2K. 2K if you'd ridden this down with one lot, or got out and got back in and ridden it down here. Let's see how much more it gives you at the end here. Now, let me go back and stop this. Let me pause this right here. Hold on, let me pause the chart. You can hold it, Diane. That's the whole trade-off we talk about all the time is how much retracement do you allow the market to give back? Hold on, I'm getting some wind coming in my room here. Hold on. There we go. Fix that problem. How do I trail when I'm looking at it? Well, we talked about that, and I'll just quickly recap that for those of you that have not heard this before. Is when you have monster sell-offs like this, what you have to do is you have to take your targets and just get them out of the way. You have to just take your targets and get them out of the way. Others are going to snag your targets, and then you have to try to squeak to get back in, which can be a pain if there's I mean, there was only really a couple of decent retracements here to let you get back in. There was one right here, you know, sort of a medium one that didn't quite get the mid-band, is near this predictor here. You got another one right here, you know, 85, 86, just shy of the mid-band in that predictor. And then you had one here at 80, just a few ticks shy of the mid-band right there. So each one of those were potential re-entry points. In the case of the trail stop, most of you know that I follow a combination of line 6, or no, this would be line 2, line 6 on the upper side when you're long, line 2 on the bottom side, that's this line right here, and stealth. Here's the mid-band. So you have you have a couple of choices on how tight or loose you want your stops, and it's a function of the price action. In this case here, you can go line 2, you can go stealth, or you can go the mid-band, or somewhere in between, right? You know, here, for instance, if it bipped you out, you know, because you were a little too tight, I mean, very simply, you could have just jumped right back in and caught the rest of it. Yeah, so don't worry about that. If you got a strong, powerful trend and it's moving real nicely, you know, if your stops are a little too tight and it wicks you by a couple of bars, wait for the roll, jump right back in. Wait for the roll, jump right back in. Now, after a 200 plus tick drop on oil, let's start to look at what happens over here. Now you're at 11:30. You're about 4 hours into trading after the news inventory, and you come up to the mid-band one more time right in here. Now I'm going to advance this chart, and I'm going to ask you some questions. Ready? Okay, here we're consolidating at the mid-band, and now we're going up higher. Is this a trend change right here, yes or no? 5 seconds, instantaneous reaction, bam, Y or N, Y or N, don't think about it. So you start thinking about it, you get all confused about it. Right here, is this a trend change, yes or no? 4 seconds you left, hit Y or N right now. 3 seconds. Trend change here, yes or no? You got to look at the chart and instantly know whether it's changing trend or not. 2 seconds, Y or N, bam, hit it. One or the other. It's right in the middle of your little thing there. Time's up. No. Okay, we've discussed this several times. This area represents an area which can cause a little bit of confusion with lots of traders that we talk to all the time. And I'm referring to this. After a powerful move to the downside, deep retracements out towards the outermost band are considered phantom trades. Now, it's quite possible that markets can go and consolidate for some period of time, oscillating inside of here. I know, I mean, I know for some, don't worry about it. It's okay. It is the difference between, it's really simple. Let me just put it like this, okay? After a powerful downtrending move like this, and you stay underneath here, the downtrend is still intact. That simple. That's the textbook, if you will, way that we teach how to trade this. So in other words, this could be a deep retracement on another leg down. At the time it happens, we don't know. Now, that being said, what is the other component of trading up here that can influence our opinion in regards to the continuance of a downtrend? What needs to happen in here for us to change our opinion on the trend? Right? I'm going to circle this area right here. What needs to happen in here for us to consider that a trend might be changing? Right in here. What needs to happen? This is the anticipatory part of trading. We're looking beyond the right edge of the chart and we're thinking ahead. We're thinking ahead. We're not just reacting. We're thinking to ourselves, what could happen and what might that mean? Good. Midband could change to green. It could come back, kiss a higher level of support and bounce. MG, good. Bounce at the midband. Find a higher support level from Joseph. Exactly. So let's think about this for a second. That's what we're talking about, and I think that's where the confusion comes in. It is not unusual for traders to trade this area after a downtrend and have the ability to trade both sides. So in other words, let's go ahead and advance it and let's see what happens. Okay, we come down, we bounce, we come down, we find some support, we come back up. Okay, I'm going to pause it right here. Let's expand this out and make it clear what we're talking about here. So what did we say? What did we say? We said it clears the nose on our face, right? If we continue to get swings that do not take out the outermost band and then reverse and head back down to hit some level of support at or near the midband, you could make the case that the downtrend is still intact. And so shorting this rollover is perfectly acceptable. Right here, yes? That's the phantom trade. We all know that. Now, conversely to that, we are watching this area right here. Why are we watching that area right there? What's important about this area right here in regards to what we're watching here? Why does this level matter to us? See, look, the wick of that bar came within, I don't know, couple of ticks of it, right? What difference does this swing make right here? Why do we have a line? Why do we even care about this, right, this area right here? How is this relevant to what we're trying to trade here? Anybody? Who cares? It's just a bunch of bars on a chart, right? It's important support because it will determine whether you have a higher low or a higher high, yes? It's incredibly important. When somebody says in the room and you hear comments to the effect of, wow, that was a higher low, what does that mean? So for instance, right here, it wicked just under the midband by a couple of bars and bounced. What does that mean? Heads up, heads up. Trend change, possible trend change afoot. Possible trend change afoot, yes? So if you were somebody who shorted up here on that roll, what are you doing with your trade down in here? Covering it. And could you flip it long? Sure. In fact, I would bet in here some traders took the short, or maybe you missed the short because you don't like phantom trades. I know some traders don't like phantom trades. Understandable. No problem. It happens. We have our favorite trades and we have trades that we don't. If you're short, you're covering down here. It's clearly a support area. Yes? And some traders might have been waiting for put a box on this thing and went ahead and popped a quick long in there. So when we said this going into this area, what did we say? We said you could trade both sides many, many times. Where this comes off the table in regards to trading either side of here, long and short, is if this was to happen. The shorties up here from the rollover at Phantom went ahead and it plows right through support and goes down to a fresh low. That is trend continuation, right? Yes? Bars turn red, starts to break down, comes and checks this level, breaks it, trend continuation, more shorties, on down we go. After a 200 tick drop on any instrument, is the likelihood that it's going to continue down or perhaps do a larger retracement back up? This is the anticipatory part of the trading, thinking ahead, thinking out of the box when the market's moving around. A 200 tick drop, are the odds that it's going to keep going down more, or that there might be some short covering to push it back up a ways? Thinking ahead of time, right? Heads up. What are we thinking? Probably might be heading back up a little bit, huh? Clearly, if the shorties were still in control and this market had a trend continuation to the downside, taking it down below the 200 tick drop further, then you would have cleaned out this whole 50, 50, 50 area right here. But obviously that did not happen. So there's a combination of short covering that's happening in here, profit taking on the shorties who were short from way up here somewhere, right? Look at this. All the shorties that are short from way up wherever they got in, they're covering down here, right? They're covering. And so when shorties start to cover, even if there's not a buy program in place, it has an updraft effect on the market, yes? In fact, sometimes we know that's how some rallies start. Some rallies don't start with buy programs, it starts with short covering and then later turns into buy programs. Let me advance it a little bit more and you tell me what you think in terms of trend change. Okay, you ready? Okay, I'm going to advance this a little bit more. Okay, here we go. I'll pause it in different spots. And you tell me, the team collectively in here, when you think there's a trend change. Okay, so here's the next few bars. How about now? This didn't happen. Let me take that off of there. Type in an N when you think it's now, or a Y. An N for now or a Y for yes. Is this a trend change, yes or no? Right here. At 12:18 yesterday. Is that a trend change, yes or no? All right, let me advance it a little bit. Not yet. A couple of yeses. 3, 4, 1, 2, 3, 4, 5 yeses, and a couple of not yets. All right, let me continue to advance the chart. Okay, how about now? Want a couple more bars? How about now? Yes or no? Simple question. It's a Y or an N. Yes or no? Right here. Has the trend changed from down to up yet here? Yes or no? 5 seconds. Cast your vote. I see quite a few yeses, but still a couple of no's squeaking in there. Dennis, Mindy, who else is no? Hardy, couple of no's still. Ton of yeses, all right? All right, let's move forward. I'll advance a few more bars. How about now? All right, let me, if I may, share some thoughts, okay? And this is how I look at it. This is not everybody's way of looking at it. Some people might look at it a little bit differently. I will share with you my interpretation and how I normally look to trade this. Some people do it a little differently, and there's nothing wrong with that. Now, first I'm going to share mine, and I'll show you an alternative perspective. The key in sharing this, let me pause for 1 second here if I can. Why do we take time to share different perspectives when we're looking at financial markets like this? In other words, is there always one way to look at a situation like this? Is there only one way to look at it? Or is there, in occasion, are there a couple of different ways to look at the same scenario? Yeah. Yeah, normally there is a couple of different ways. Sometimes there isn't. I mean, I think when you talk about a powerful downtrend, there's no discussing alternative scenarios to a powerful downtrend. The trend is down, you're shorting it. I mean, you know, there isn't a whole lot of discussion about this. You take retracements, you load it up, you short it, and you make a lot of money. Done deal, no discussion. Where it becomes have a little ambiguity to it, and this is, I think, what confuses a lot of traders, and this is why a lot of us have to wait to be fully convinced of what we're seeing before we take action. And that's okay. There's nothing wrong with getting in a little bit too late, because a lot of times if there's a trend change, sometimes you always miss the first leg. So look, if that's you, don't worry about it, okay? Everybody doesn't catch the first leg of everything. The first clue that a possible trend change afoot was right here. We talked about that. This is the higher low. We see it, right? In my view, when this swing was taken out to the upside, this was confirmation that the trend was changing. Now, granted, we still went up into the outermost band. I understand that. You purists, I understand the counter argument to that. You're going to say, well, Charles, we're still in that outermost band. I still want to be shorting this. And I understand that argument. That's perfectly fine. However, when you get to this point right here, and you get the third higher low after it took this swing out right here, in my view, we're getting confirmation that the trend is changing and you're looking for longs now. Right here. Okay? It would be a different story if it came down here and took this out. All bets are off. You're right. That was a deep phantom retracement. The trend is still going down. But did that happen? No. It got a third higher low. One, arguably this was one. This was the low. Here's one higher low. Here's two, and now we have three, and that swing's been broken to the upside. In my view, now I'm looking for longs. If you didn't catch this long, you definitely should be grabbing that one. Brian, it's real simple unloading the boat. It's real simple unloading the boat. And let me translate that into our earlier discussion. You might have came in a little bit late. Some people came in late, no problem. When we're looking at scenarios where you have a strong, powerful trend move like this, is this a load the boat scenario, or is this just scalping, putting a couple of dipping the toe, one or two contracts on? A trend like this, is this load the boat time or not? Yes or no? Runners. So our question was, remember the question? Are we scalping or do we have runners? So what does runners equal? Runners equals what? It's boat time. You put as much on it as you can. If you can afford 10 contracts, you put 10 contracts on that puppy. Now listen, don't over leverage yourself, okay? It's all relative to the size of your trading account. If your risk profile does not allow 10 contracts because it's simply too much risk, you can't put that on. You have to stay within your risk parameters. Don't take, what am I saying? You know, if you have a modest sized trading account, couple of $5,000, $10,000, you really shouldn't be putting 10 contracts on any move. Okay, that's gambling. You don't want to do that. You know, for you, loading the boat might be 2 or 3 contracts, right? Maybe 4 tops. Now, if you got somewhat modest to larger size, you got maybe 10, 20, 25, 50, 100,000 plus, sure, you can put 5 or 10 contracts on that and ride the thing down. That's not undue risk. The fishing is wide open. Right. Large, powerful trend moves is when you load the boat, when you got the runners. Okay, when you're scalping around in a range and it's trying to figure out where to go, this is not the time to load the boat. Let's go back and finish this up. Now, before I go on from this scenario right here that we're in right now, is there any question about this? Okay, I want to be crystal clear. Tomorrow morning, tonight, whenever anybody trades, this, watching the recording of this or trading in here tonight, is there any question? This comes up all the time. I have to say almost every time I do a webinar, I try to address this as best I can. Is this clear what to do in here? When you come off of a trend, you're at or around the mid band, bouncing around between there and the outermost band, called the phantom. Is it clear what to do in here and how to look at this? Brian says crystal clear. Brian, you can always put a scalper and a runner on pretty much on every, but let me give me a minute to come back, circle back and answer that question. I don't see any more questions. Let's go ahead and move on with this, and then we're going to wrap this part. Clearly, I think everybody by now would agree we've changed trends, that this buy here was actually a very good buy, and we went up and we're putting in higher lows and higher highs. I don't think anybody would question that. So, you know, here you're catching the first leg. Maybe you got it, maybe you didn't. Clearly, this pullback here was the long trade entry. And even if you missed that, when you pushed up and cleared through this swing right here, poking through it and pulled back and paused at line 6, you had another shot to get in right in here, long. All right, Mindy is saying, I guess sometimes what throws me off, instead of buying the white predictors, I get to take it at the pink one. Here's the thing. Now look, I want everybody to understand what I'm saying here. The predictors are an important part of trading. They're integral to our trading system, and they are very good at predicting where swings are, and I use them all the time. But I'm going to say this as a caveat to that comment. With all that being said, if you're telling me that looking at predictors is confusing your ability to see a trend change in here, then maybe in here, just for the moment, you might want to toggle them off. Okay? Because when this is all going on right now, the predictors are really not in play. I guess that's what I'm sort of trying to say, right? You can see here that the swing levels are in play. That's what we're looking at. We're looking at the swing levels. How far is it going up? How far is it pulling back? How far is it going down? How far is it pulling up? This, in a trend change scenario, is what matters right here. Now, going back to the predictor thing, you can see over here there's many scenarios, for instance, in this downtrend where the predictors really came into play nicely, right? See how they're kind of predicting support and resistance? So don't misunderstand what I'm saying. I'm not saying forget about the predictors and ignore them. I'm saying there's scenarios where they can help you a lot, especially in a good trending move like that, right? But in a trend change, if you're getting confused, toggle them off and look at the swings. Okay? Everybody see that? Any questions? We're going to go back to the situation from this morning if there are no more questions on this. All right, stand by. Let's get back to this morning. That was yesterday. Okay, everybody ready? We're going to toggle back to this morning. All right, here, let me trying to get back to the setup that we had right before we left here, so we're all on the same boat together with this. Remember, here's where we left off on today going into the pit open. Stand by 1 second. You should be able to see the chart now. Remember the pre-market, here's our marked up, here's our lines coming back to today. Now, getting back to our earlier question. Is this a load the boat time or hold your powder? L for load the boat, H for hold up. Or dip the toe. D for dip the toe. Dip the toe. By the way, if everybody's like, you know, I've heard this question. I hear dip the toe in the room all the time. What the heck is dip the toe? What does that mean with dip the toe? That makes no sense, dipping the toe. That's just ridiculous. All right, look, here's what it means. It's really simple. Whenever you have a big running, thrusting, trending market and we're loading the boat, we're putting on more contracts, okay? So depending on our risk scenarios and profiles and how we look at the market, that might mean anywhere from 5 to 10 or 20 contracts. That's loading the boat. In other words, when you get the retraces, you're loading it up and you're peeling some off and you're putting some more back on and you're trading, you're getting every milk and every tick you can get out of that trend for as much money as you can make on it. In a scenario like this, on the morning after inventories and you had a 200 tick move and you're clearly in some very tight ranges here, this is not load the boat time. This is put 1 or 2 on and scalp it. This is dip the toe time. Okay, this is dip the toe time, scalpy time, right? So let's play this out. Here we get the pit open. We come up. What's happening right here? In fact, you might have taken this. This was early. You would have been room was probably open about 5-6 minutes. But what happened right here? Where is the location of this retracement in regards to our pitching strike zone here? Here's our pitching strike zone. So you're standing at the plate, right? You're playing softball or baseball. Somebody's throwing a fastball at you, and it's coming right in here. What are you going to do? Watch it pass you by and go in the catcher's glove, and the umpire says, strike one. Just went right by you. Strike one. Right down the middle of the pike. What are you going to do? Everybody in this room tonight said you were shorting this market. Every single person. You pull the trigger short. Of course you do. Gets almost down to the bottom. Comes back up. Comes back up. Where is this swing? Right here. Upper end of the strike zone. Pitch number 2. 89-mile-an-hour fastball. Upper end of the strike zone. What are you doing? Strike 2. Swing and a miss. What does it do? Rolls over. Where does it go? Now, when it gets down here, when we're in the room and the market is choppy and we say, when it just hit the lows and wicked it by 1 tick, take your coin down there, what are we saying? Excuse me. Let me get a sip of tea. Stand by. It just wick support. Take your scalper coin down there. What are we saying? Are we saying, oh, we're going to get a runner? Leave your runners on. Put your stops way up here where you got in. Let it run. Here, you had a 12-tick initial stop. Maybe you put 2 on, right? Here's your initial stop. You're peeling 1 off down here. Should you leave your... Is this a scenario where you leave your stops at the midband? Right? You got in up here. Yeah, just leave that second stop right there at the midband. We want to see if it comes back to it. What do you think? In a scalper scenario. Fade it by a couple of ticks. Break your stop to break even. Well, if you don't want to give all the trade back, might it be prudent to take it right here? On the second one, in case it comes up and bips and rolls and goes down in there, what does it do? Takes your stop out. But in a scalping scenario, it's okay. Now let me advance this and ask one more question, and then we're going to get off this chart. I want to get one more chart in before we wrap. I don't want to spend all night on this. This happens to you sometimes, and I want to talk about how we're going to address it. In this scenario here was the, let's see here, 1, 2, 3, arguably 4th time that we're hitting the midband. And perhaps you boxed it, 7 o'clock, and you're filled short in here. Is it possible in this scenario, given the fact that this wicked the low, this didn't get to the low, and this certainly didn't get to the low in here? In fact, I remember we were observing this, Gary and I were observing this in real time. Is it possible that we could pop up through this resistance area and go up here, even possibly higher? Is that possible? So what I'm saying is this, is if you went ahead and re-shorted right in here, would it be prudent to have a tight stop or a loose stop? So should your stop be way up here? Or might your stop want to be pretty tight on that 4th run up to resistance? What do you think? Tight or loose? You already made some money scalping. You made 1 short, you made 2 shorts, possibly 3 shorts, getting a higher low. It's checking here. You're getting try to peel one more bite at the old apple here, right? Give me 1 more short. I'm gnawing at the gristle. And then what happens? Fighting it, fighting it, fighting it. Now look, this took about 10 minutes to happen, okay? So this isn't like 30 seconds of watching this. You had these bars come bip down here. You're wicking the midband right here. You're wicking right in here. Look at it. What type of price action is this telling you when you took this short and you're watching it do this, right here, these two circles right here. Let me ask it a different way. Are you getting follow through down to here through 75, 76, and are you getting follow through down to here? What are the breadcrumbs that this is starting to tell you? Here, let me give you another bar. How about right now? That one right there. It's a battle. You're getting a lot of short covering. You're getting higher lows. You're short from here. Maybe you got a scalper off, maybe you didn't. What are you wanting to be doing? You're going to leave your stop way up here? We already agreed it's going to be tight. What are you going to do? Here, let me give you another bar. Okay, here you're wicking around the mid-band. You're just a few ticks above your entry with that little doji candle. Now it closes up. What are you going to do? Now, the answer is this. If your stop was tight, it might already got you. Okay, super tight, you would have maybe got you somewhere in here. So you'd have bipped a little bit of a loss, which is okay because you had three winners here. 1, 2, 3. Is it okay to go ahead and just close this trade and get out of it in here? Can you just go into Object Trader and hit bam, close button? I'm not going to take a huge hit. Isn't this also an argument for not putting on 5 or 10 contracts in a scalping mode? Wouldn't it be better to take a small loss on 1 or 2 contracts than 5 or 10? Of course. Because in scalpy time, in fact, somebody typed this in. Mark, I think, typed this in a minute ago. He says it's a battle. You're battling in here. That's what scalping's all about. Now listen, if you're not good and don't like scalping areas like this, particularly on oil where it's choppy, do you have to trade this at all? Yes or no? If you don't like scalp trading, and you're not really, you've acknowledged to yourself that you're not good at it because every time you try it, you wind up losing money. Should you be trading this area at all? Yes or no? Do it in sim. 4, 5, 6 no's. Philip, Peter, Joseph. Look somewhere else for a market that's moving. Good, Mario. All markets are not stuck in ranges like this. What about gold? What about the Russell? Is NASDAQ moving? Should we be looking somewhere else for maybe a trend move or a breakout that we want to capture? Yeah. Now, we've said this before, okay? Here's the thing. You just can't, all due respect to everyone in here tonight and everyone listening on the recording, you know, it's not fair to just chuck trading ranges out the window and say, I'll never trade them, right? You know, you're giving up half the market. At some point, you're going to have to try to learn how to do it, and that's why I like the answer of doing it in sim, which I think was from Mindy. Practice in sim until you get the hang of the ranges, and then go live with one or 2 contracts. Here's a good example here. Here's 6J. Excuse me. Let's look at a couple other charts, and then we'll wrap. Here's 6J. Here's 6J all day today. Is this a trending market or range-bound market? The answer is obvious. It's range-bound. Is it tradable? I don't know. Is there resistance up in here, resistance up in here, and support, more or less down in here? Fairly well-defined support area, plus or minus a few ticks. Let's see, 90 up to 35. This is about 30, almost 45 ticks. Is it tradable? Yeah. Could you try to trade it? Of course. Now, let me be clear about this. It's a little ugly. It is choppy, no question about it. And if you're turned off by this, I'm not telling you to fight your way through it and go trade a range. That's not what I'm saying. I'm saying that you should try it and try it in sim. And not every instrument is the same, okay? If you say, look, Charles, if I see a clean range that's 20 ticks or more, and it respects support and resistance, I'll go ahead and I'll try to trade that. I'll trade long, I'll trade short, I'll take the whole deal there, no problem. If you don't like the fact that this is a little bit spiky, in other words, let's say you're trying to short up here and it goes a little too far, it comes down here, you're short, doesn't quite get the support down here, right? It flips on you, this doesn't quite get up, this is what we call spiky. Okay, it's not respecting swings sometimes too good here, too well. It did here and here, but then over here you're getting some lower, more spiky issues. And to take this one step further, if it really starts getting tight like this, then absolutely this is not tradable. You just avoid that altogether. Okay, so really we're talking about from here at about 1050 to the left would be your tradable type ranges, right? You get down into a tight little 15 ticks box, it's really tough to scalp any money out of that. Are you buying support? Are you shorting it? You try a mid-band trade, you get stopped out, spikes up, you're trying to short it, rolls, and then it just bites you over and over again. And if you get bit in a range live, try it again in sim or look elsewhere. Just don't let a range beat you all up and take your money away. Okay, that's what I have to say about that. Listen, we're right here. We're going to go ahead and wrap. Any final questions? Thank you for coming, everybody. I'm going to stop the recorder.